Well, welcome back, everyone. What an incredible week in markets we've had. Let me take you into some thoughts on the events and where we now are as we move into the week ahead. As you can see on the screen, you've got lots of lines, but you've got a daily candlestick chart of the SPY going back to January of 2022, back up top left here. Center of the screen, lows of October. And here's where we ended up. Now you'll notice that there's a whole bunch of lines running through the center of the screen. The ones going infinitely across are weekly pivot lines. And the purple line right up top that's got a label of $414 and a nickel is the 50% retracement marker from the highs up over there, of course, Jan 2022, to the lows in October. We did not close above that halfway marker, which would be a bullish signal. However, in the 3-day intensive we did for active trader room members, wealth charters, it was a quarterly intensive, 3 full days with lots of speakers. I got to have 2 big segments in and close the entire session off with an outlook and update session, and wanted to give you some of those thoughts as well. Rob asked me to do it based on how well the overall 3-day intensive went, and said that he's going to be happy to be back here with you on a day trading focus and provide his market thoughts as well in next week's market action. Now, he does say a big hello to everyone. So what I'm going to say to you right now is we called out a likely outcome for the week with some areas of warning and issues. We had a more positive view for the market to try and push back up above 414, or at least back into it. And we've got that in play. Now that earnings season is off the table, largely, most of the market cap of the S&P have reported, with Apple being the most important and last one. And now that we've also got a lot of the issues that are related to monetary policy, at least clear as can be from Powell's statement Wednesday, there are still worries with bank woes. There are worries with the debt ceiling, potentially at the beginning of June. And we've got the sell in May and go away crowd that may be looking at this market and wondering, where is it going? We did not see the selling break the market down. Earnings didn't, Powell didn't. So if the sells aren't selling, as Rob says, is it time to buy? Well, swing trading might become a much more important focus as we move through the next several days and potentially into the summer. I'm not going to tell you that I know what will happen. I am going to tell you that now that we've gotten through a few of the big barriers, there may be days, a week or two, of potential opportunity. So I'm going to take you over to one of the templates that I've shown you in videos just like these that we were using. It's a layout in wealth charts that I've developed for members of wealth charts and the active trader room. When you look at the chart that's on screen, it's a daily chart of the SPY. It's part of a bigger layout over here that I'm just going to bring onto your screen. If you saw some of my videos from earlier in the week, you'll remember that. I use this exact same layout to make a bearish trade from Wednesday, Powell's statement, through Thursday morning. That trade was called UVXY. It was a long volatility trade. It worked out quite well. Grossing just around that $750 marker. And it's something that I showed folks, of course, with showed them live in the actual intensive we were doing. Now, that's in the past. Where were we left? Well, we've got several scanners on screen right now, a daily, 4-hour, and 1-hour, and they're scanning for the amazing tools that Rob uses himself to win trading competitions. So he's now a 32-time world champion on international and domestic champion on real money on-site trading competitions. And part and parcel of what he does is use tools that have a high probability and use the tools with his rules. Once you stop using the rules, things can change. Bottom line, we have a daily chart of the SPY for those of you that have seen these tools through the summit and or earlier or since then. We've got a champion trend buy zone. We've got a green candle at the hard right edge with a champion cross buy on the daily chart. We do recognize very clearly that there is a negative momentum shift up here, and this is the key area that one is looking at and saying, well, do we have enough gas in the tank to actually come back up here and break it? Now, the answer is held within time frames underneath the day. The 4-hour chart's not quite on as bullish a set of signals. Actually left on some mixed or bearish signals. But the spike tool is clearly telling us it wants to put some bullish fuel to work. but it may have a pause early next week. So where we left off with the hourly chart gave us a little idea of how is the market likely to react into Monday, and then the timeframes we just discussed would tell us that likely there's going to be an opportunity for a move up. Now the caveat here, of course, is another bank rising to the surface in terms of issues. That could be a problem. And of course, geopolitics is standard fare. As far as I'm concerned, my toolkit over here on a multi-time frame basis was neutral to mostly positive. Now we've got the daily chart for the SPY on the champion cross neutral for 3 bars, but as of the end of the day, very likely it flips after the after hours are done to a bullish. The 4-hour is not on our side yet. The hourly chart had multiple positive signals up until the after hours started. So as far as I'm concerned, there's a little gas in the tank to keep the ball up in the air as we move towards Monday. Again, caveat on banks that could rise to the surface and provide issues, which I would not be surprised about. But we got a positive enough set of signals, and the index that mattered at the end of the day was the Qs. So I'm just going to highlight the Qs on an hourly chart here on the power scanner. I'll bring them up on the screen as well for you. And you can see fairly clearly here as I move my little template around here where you can see the daily for the Qs, the 4-hour, and of course the 1-hour. It ended quite bullishly. It's the torchbearer with the higher market cap weights in it that the S&P shares. And the S&P is the benchmark, as we all know. So we've got a set between the SPY and the Qs of signals that lean more positive than not. Now that keeps the door open for a rise to retest the top of a range that we've been in. So what's the top of that range? Well, let me depict this to you vis-a-vis the SPY here. So I'm going to bring that up on screen. This is the SPY on the daily chart where we started. And if we go back in time and take a look at where we are, let me just get that on your screen very, very clearly. You can see that in August we were above this area. But since then, we have not been able to get above and hold above $2 radius around $415 on the SPY. The time spent this go around attempting to get up there and the existing signal state leaves us not optimistic or pessimistic, not hoping, but in a signal state that is neutral to positive with enough fuel in the tank on the daily chart spike tool and on chart signals to try to retest that negative momentum shift. Breaking above and running from there is not the expected outcome because of the signal on the 4-hour chart as we just saw. Coming up to test it, perforating it, would be a neutral to native outcome from what I'm looking at. And then we can build on it. As mentioned to folks that were joining us for that amazing 3-day intensive class we did, where this layout was introduced on both a swing and day trading time frame, we mentioned to folks that, hey, this market is not in a spot where it has sold down when major negative events have played out. And earnings season is in the rearview mirror. It's not likely going to be adding any more tailwind to us, but it didn't break the market, even though guidance and outlook for slower consumption and growth top lines has been installed. So swing trading becomes a very interesting moment, and we have ended the week on the most important index, the SPY, in a swing pattern. Of course, under resistance that still needs to be broken. But as you can tell, 1, 2, 3 bars, 1, 2, and 3 bars. It's a basic swing low pattern that is validated by signals and watching for a key level break next week that is unlikely to happen first thing Monday morning. A move up towards it would be standard fare. A pullback based on what we are seeing signal-wise on the 4-hour chart, i.e. champion cross sell, i.e. the red dot on the Spike 2.0 tool, that is a little cause for pause. But even though that is in play, we do see on the daily chart enough fuel in the tank to attempt a move up. And if that move over the course of Monday through Wednesday finds the SPY above that negative momentum shift, roughly valued at $417 and about 55 pennies, the door is then open for a move higher. Now to where? Well, the history that we have above this area that is most recent is August of last year. And the high point over there was around that 432 area. That would be a target area that the market could move up to. Now, what if I'm wrong here? I'm never going to tell you I know I will be right. I know what my tools are telling me, giving us a positive upward move bias. And that, again, opens the door for swing on an intra-week basis from my perspective. Not necessarily weeks, as we still have lots to get through into the end of the month of May. What I'm looking at here is the potential for a breakout that started with a swing low pattern confirming this week that opens the door for more long side bullish swing trading potentially. If I'm wrong, however, how do I know I'm wrong? Well, we'll have to come down to a level that starts warning. And of course, on the daily chart, which sets down those big tracks for swing traders, coming down and anywhere in the lower half of this week's range would be problematic, in particular below $409. And then on a break below the champion trend buy zone, things are likely then to be clearly more negative. I'm not expecting that. I am, however, keeping my mind very wide open for slips to happen as the market yet again attempts to break out above that $415 area, and so is TED. Many of you may have heard from TED during the summit and, of course, in other events as well. Now, for the very first time, TED is going to be coming to us live on Wednesday, on Tuesday in the coming week. And you can see that that's in 4 days from now, where he's going to be doing on Tuesday, May the 9th at 7 p.m. Eastern Time, a session on swing trading. I'm very much looking forward to being at that session to listen into TED. You're going to have a lot of how wealth charts is put to work in a clear-cut, simple manner, and how he approaches his swing trading using wealth charts. There's that handsome man. Looking forward to his session on Tuesday, May the 9th. If you'd like to join us, which is something that I think one cannot afford to miss in this market. We've got a lot of the stuff that was negative in the rearview mirror. Still some challenges ahead, but clearly, as you've seen from this video, I hope, there is the potential for a break above the top of the range. Now, if we can't break it and come back down, well, guess what? We're still in a range. Swing trading becomes very important as we move through the month of May. So I urge you to go get your seat. Make sure that you're ready to go. Simply go to the link in this video or go to becomeabettertrader.com/swing. I'll show you the link right over there. That's the URL, becomeabettertrader.com/swing. I'd like to thank all of the students that joined us for that 3-day intensive on wealth charts and in the active trader room. And of course, wishing you a wonderful, wonderful weekend. Looking forward to seeing you on the flip side. And of course, very much looking forward to seeing you at TED's session on Tuesday, May the 9th, starting at 7 p.m. Eastern, 4 p.m. Pacific. Have a wonderful and safe weekend. Bye for now.